Bitcoin is really the ultimate risk-off asset because it's, as Michael Saylor says, it's an asset without an issuer, right? So there's nobody in control of it. There is no central bank. There's no intermediary. It's just a protocol with a fixed supply of 21 million Bitcoin. So as people start to learn more about that and adoption continues to increase, people start to put more and more of their wealth into Bitcoin. And of course, that drives the price higher. And we need a good money that allows us to transact fairly and to store the fruits of our labor and our energy. And if we store that in a leaky bucket, and then we get back to the bucket and all the water's gone, it's like, oh, now I got to go work again, like twice as hard to go fill up this leaky bucket and bring it back home. So that's not right.
Today, I'm excited to welcome Mr. Lee back to the podcast. Mr. Lee is a Bitcoiner, a futurist, strategy investor, and Jesus follower. This is not financial advice today. Welcome to the Bitcoin Edge, Mr. Lee.
Good to be back, Paula. Glad to be with you again. Thanks for the invite.
Yeah, it's quite a day, right? We have the stock market down almost 2,000 points, and Bitcoin happens to be hanging around 84,000. Why don't we start right there?
Yeah, it's been really interesting to observe. So if I look at, markets right now, I'm seeing NASDAQ 100 is down 5.5 points. I'm seeing the Dow Jones down almost 5%. I'm seeing, Russell 2000 down 5%. So the broader markets, S&P down almost 5.25%. So broader markets are really selling off. And typically Bitcoin has been trading like a tech stock, right? It's been trading pretty well correlated to particularly the QQQ, I would say, like the NASDAQ 100. NASDAQ 100 is down 5.3% right now, but that's not the case. So if I look at Bitcoin itself, it's trading 1% positive on the 24-hour period. If I look at something like IBIT to get more of a TradFi view, IBIT's up 2.6%. So definitely interesting that while the overall mood is risk off and people are selling, especially tech stocks, very heavily, we're seeing Bitcoin stay very buoyant, and we're seeing major proxies like Strategy, formerly MicroStrategy, trading. It's up almost 3.5% right now. So this is not a big surprise to me. This is actually something that I've really expected for some time, which is for Bitcoin to start trading like what it is, which is a risk-off asset, right? Bitcoin is really the ultimate risk-off asset because it's, as Michael Saylor says, it's an asset without an issuer, right? So there's nobody in control of it. There is no central bank. There's no intermediary. It's just a protocol with a fixed supply of 21 million Bitcoin. So as people start to learn more about that and adoption continues to increase, people start to put more and more of their wealth into Bitcoin. And of course, that drives the price higher. Certainly, we've been seeing, I think people have been, I would say there's been a malaise a little bit in the Bitcoin space from a fiat price perspective because they've expected the normal cycle. If we were playing by the typical cycle, they think we would be a lot higher. There's a handle out on X called Chart BTC. He does a really nice job putting out different charts, comparing cycles and things like that. And if you look at from a halving perspective, cycle over cycle over cycle, it looks like we're way behind. From a cycle low to a cycle top, it looks like we're kind of right about on the cusp of where ordinarily Bitcoin would make its big run. So everybody's been kind of waiting for that. It hasn't happened. So it's very interesting this week as we've had tariffs, which I'm sure we'll get into, announced by the Trump administration. We're seeing people move to more risk off. And we've seen Bitcoin kind of drop several times over the last couple of months, as it maybe normally does. But now today, not so much. Now today, it's staying as a flight to, what did Larry Fink call it, right? CEO of BlackRock, a flight to quality.
A flight to safety. We've heard both of those.
Yes.
Yeah. Do you think that the volatility is going to continue to decrease? And I've heard a lot of people say that the bear market might be beginning.
Yeah, that's been really interesting to watch, right? So this is my first cycle. So I really started to follow Bitcoin closely in 2020, end of 2023. So I guess I'm still a baby in Bitcoiner terms, but I've definitely been studying deeply, right? Looking at the prior cycles, what was the mood? Maybe looked at old videos when Michael Saylor first got into it, or American Hodl, listening to his interviews, different things to get a sense of, hey, this always happens. There's always a period in the bull market, if you subscribe to the kind of the typical 4-year cycle theory, where Bitcoin has 3 green years or up years and 1 red year, there's often a point where people capitulate and they just say, if they're traders, if they're like traders, they're speculators, they're maybe not true believers in Bitcoin as a true story of value, if they don't really understand what Bitcoin is going to do in terms of monetizing other assets, other store of value assets, then they're going to capitulate. They're going to get frustrated. They're going to say, "Oh, the top is in." And I've seen next posts saying, "Oh, the top is in 109,000. That's it." And I'm saying that's not if it, even if it were for the cycle, from a long-term perspective, I don't care. It's going up forever, Paula, right? Like we said last time, because the facts of the matter are still the same. If I think about it's a simple fraction of fiat over Bitcoin. Well, how much fiat is there? Well, infinite, right? If our Minneapolis Fed chair, Neil Kashkari has said there's an infinite amount of cash in the Federal Reserve. And how much Bitcoin is there? Well, there's 21 million. Okay, so right there you've got this idea of like almost like an inverted pyramid of like infinite capital coming down into this very finite asset, which means price is the only adjusting mechanism. Knowing that's the case, and then knowing that it's an asset without an issuer, knowing that it's a open source protocol that anybody can choose to join and leave at will, knowing that we're seeing adoption first from the individual, the sovereign individuals, if you will, that have been buying into the asset and adopting the protocol over the last 15, almost 16 years. Now, then we started to see corporates start get into it with Saylor and MicroStrategy, now Strategy, and now possibly GameStop. We can talk about those things. So other companies have been starting to adopt, and then now sovereigns. That's going to be the next adoption wave. So with all of that potential capital coming in, Saylor talks about $900 trillion of wealth in the world, and Bitcoin is like 0.2% of that. You got to be kidding. Like you have to like lower your time preference and be patient.
Well, it's funny you mentioned that. It's one reason that I speak to a lot of people about the spiritual side of Bitcoin or the other things that we love about Bitcoin, how it's going to change the world and the hope it gives, because we all do care about, or most of us care about the price. But price is important because it brings people in.
Yeah, I agree. I mean, price is a signal. If I think about what Austrian economics tries to teach us, right? The von Mises, Rothbard, all of the great, Austrian economists. And of course, in our modern day, we have Seyfedin Ammous, right? From the author of the Bitcoin Standard and others today, would tell you that price is a signal, right? I've heard Parker Lewis say that a lot too. And so when we distort price, which is in the fiat system, price is deeply distorted. I'm sure we'll talk about kind of, how the current post Bretton Woods, post Nixon shock, kind of what our current monetary system is that most people just frankly don't know until you study some of these books and try to dig into how did we get here? Why is it that it seems like jobs are fleeing our shores? Why is the price of my goods constantly going up? Why, if I'm a millennial or a Gen Zer, I can't possibly afford a house? I mean, good grief, 5 years, a house goes from $250,000, which already seems like a lot of money, to $400,000 for a starter home that requires a bunch of work. It's like, what's going on here? And so we've distorted price. And so the cost of like governments, treasury yields, et cetera, have been, of course, kind of artificially kept low. And so that allows us to, of course, run huge deficits and kind of do whatever the public wants the government to do, because now the money is essentially free. If I run over my budget, as the federal government runs over its budget, no problem. Federal Reserve can, buy up those treasuries and print the money as needed, or you can rely on the banking industry to do that. And then we can just spend as much as we want for limitless numbers of wars, satisfying different special interests, trying to, get certain, governments to do what we want them to do. Lots of different things that are probably not, quite frankly, very good from a moral perspective. So Bitcoin brings in a real moral clarity, I think, right? Because it's something that you can't debase. In the Bible, it talks a lot about honest weights and measures. And for your audience, if they haven't seen the movie Thank God for Bitcoin that came out, I think it was last summer actually at Bitcoin Nashville, the conference, highly recommend it. It's just lots of different faith perspectives, not only the Christian view, but also other views from Islam and from Judaism as well. But Bitcoin is this more like, it's truth. It's like a very true ledger. Right? It's an honest ledger, right? Are there ways to cheat? Sure, if you want to try to put a false block into the blockchain, be our guest. Go ahead and build up enough computing power to beat all of the rest of the 850, 900 exahash, of hash power from miners all over the world. And if you can do it and get 51% of the network, have at it. The fact of the matter is there's not enough computing power in the world outside of the miners that are contributing to the network today that could get there, right? So you have good, honest incentives. You have an incorruptible, immutable ledger in the Bitcoin blockchain. We know what the rules are, right? We know exactly what the rules are. And so it's not like in the fiat system where the rules can change. So I think it brings a moral clarity, and it also forces, I think, better decisions. So, for example, I talked about how America specifically has been in these limitless wars. We've been in wars for. I mean, I think it was Ron Paul that said, right, the year of total war kind of coincided with the era of central banking and full fiat currency, and so we've been able to do that because governments can just print their money as much as they want and then go to war. They don't have to come back to the populace and say, hey, we want to go and fight this battle on the other side of the world. We're going to raise your taxes, 20%, so you can fund it. Of course, the people would say no. So instead, they go fight the war, and then the bill just like I was thinking about this the other day. I was thinking about like the Iraq War and different wars we've been in the last 20, 30 years, and I'm like, yeah, everybody would talk about how it's costing trillions of dollars. I'm like, where is that money coming from? Like at the time, it made no sense to me. Like, how are we writing these checks? But only once you start to understand, oh, we can just print money when we need to and monetize the debt through various means. There's really no bill that comes due. We just kind of keep kicking the can down the road. So that's something that I think Bitcoin has the potential to curtail, because eventually, folks, and that's why this decoupling day today is so interesting. Eventually, there's gonna come a time where people are going to say, investors and asset allocators are going to say, okay, I don't trust the treasuries anymore because they're going to just keep debasing the currency. And these companies, maybe they're actually overvalued, because if you look at the S&P 500 and other stock indices, you'll see that they kind of track right about alongside the growth of the money supply, which, depending on what stat you use, is anywhere from 7 to 12% a year. Is just the growth of the money supply in the world. So assets like real estate and stocks and everything like that is just kind of tracking along with that, or maybe just beating it a little bit. So once you start realizing, oh, maybe that's a mirage from the fiat currency, okay, and then real estate, oh yeah, I've got all my real estate. Oh, well, that also has been tied to this whole fiat currency situation, and so those are probably worth less than they actually are fetching today. Once you start figuring all that out, then you're like, okay, what are my options? Like, what's a hard thing that I can put my money into, especially with times like today where there's a lot of uncertainty. So you've been seeing gold sniff that out for several months now. Gold's made a monster move from 2,000 to $3,100 an ounce, and now it's pulling back. Now I think it's Bitcoin's turn. I think you'll start to see gold roll over for a little bit. Could be wrong, but I think it'll roll over in the near term, and you'll start to see Bitcoin's time to rise.
Well, you called it right here, Mr. Lee. On that note, at the moment, the government's not printing that much. We have the tariffs. I don't know if you want to start first at your pinned tweet, because I love that it talks a little bit about the Triffin Dilemma, and that when China got into the WTO, things started going down for the middle class. And we'll start with that, and then we'll get into the tariffs.
Yeah, absolutely. So again, I'm not an expert. I've been definitely, kind of monitoring and learning over the last couple of years on how did we get here again? Like, what is the history of money? Why is it that the things that I see, as I mentioned earlier, why are they happening? Why is real estate always going up 7% a year? All those things, right? Really, one has to, I think, kind of dig into some of the history and get into books like The Bitcoin Standard or Broken Money by Lynn Alden and others. But my pin tweet is this guy that I've been following for a while. He set up his name as Robert. His handle is Infra, and he kind of goes through like what's really happening in America. If you think about, he talks about like the misery rates. He talks about people getting depressed. Suicide rates are up. Yeah, the job numbers look really good. Like I think we're at 4.2% unemployment in the U.S. But of course we've been seeing a lot more people taking on multiple part-time jobs instead of full-time jobs. So that's not really been real. The inflation has been low, quote unquote. It's like 3%. It finally came down from 8-9%, but that's CPI. That's not really taking into account all of the real economy, right? The real things like car insurance and different things that are out there that really put the inflation much higher, like 7-8-9%, the rate of monetary debasement. And so one of the things he talks about in that post is Triffin's Dilemma, which is really this idea from an economist, Robert Triffin, who basically talked about there's a bit of a dilemma or a paradox you run into when you have the world reserve currency, like Britain did before us, and now we have it. And there's this challenge where, of course, if you're the world reserve currency, Through Bretton Woods, we said, everybody, you need to use dollars and you're all going to tie your currencies to ours. And then, of course, with the Nixon shock, it's like, okay, you're still going to be tethered to us, but now we're not going to hold any gold in reserve. Just trust us. Full faith and credit of the government. And then, of course, we put in the petrodollar system so that all all oil had to transact in dollars as well. Which, of course, all of those things over the last century has combined to drive a lot of artificial demand in treasuries in the U.S. dollar. So what that means is that the dollar ends up being stronger than all of the other, artificially, I should say, stronger than all the other currencies of the world, because there's this demand, there's this underlying demand for the dollar, because everybody has to have it to transact with oil or other commerce, with us being kind of the big buyer, the big consumer of the world. Everybody wants to use dollars, which means you have to hold treasuries, which means the dollar is artificially stronger. Treasury yields can be lower than they ordinarily would be, which of course allows us to now run deficits, right? And things like that. But how does it impact normal Americans? This is where it's really connected for me, like, aha, okay. So if the dollar is strong, and that means labor in America is strong, that means that that's more expensive. And so then you start running into situations where you're not as competitive with, say, the European market, or South American market, or the Asian market, et cetera. And so you need to find a way to reduce your input costs. That's just kind of part of capitalism. And so what manufacturers started looking at is, let's move the manufacturing to a lower cost area where the labor is less expensive. The input costs, the biggest input cost generally is human capital, your labor. So let's go to a place where the labor is cheaper. And that starts happening kind of over the series of the last several decades. So then you have folks in the middle class they've lost those jobs, and so now instead of making things, we're just consumers. So they're out in the service industry now. They're switching from maybe factories to working in the coffee shop or working in other kind of service industries. Nothing wrong with those things, right? But in some cases they're good paying, but in a lot of cases they're not as good paying jobs, right? So people are struggling to make ends meet as much as they have been in the past. And you've seen large swaths of the middle part of the country that used to be big manufacturing hubs. Those towns have kind of shrunk and died, and there's not as much there to keep them going. And so all of that, all that manufacturing we've exported leads to kind of this hollowing out of the middle class in the U.S. And so that's kind of been what Triffin's dilemma has wrought on us, I would say.
And do you think the tariffs are a way to bring those jobs back?
Yeah, so that's the interesting thing. So the Trump administration, they were big on tariffs in Trump 1.0, but I think, as everybody's observed, Trump 2.0 in a lot of ways is very, very different. And tariffs are back, but they're in a much bigger way, right? So he just announced his Liberation Day on April 2nd, a couple of days ago. And the markets are, of course, reeling, trying to kind of process all of these massive tariffs on all of the countries of the world that America does business with. So what is Trump hoping to gain from this? The rhetoric on this is that we're being ripped off by all these countries of the world that are taking advantage of us. There are trade barriers with a number of these countries. They already have tariffs. Even Canada have tariffs on our products that are very high, whereas our tariffs are either low or non-existent for many of these products. And so the rhetoric is, we're being ripped off and no more taking advantage of America. And it's kind of like, okay, but what about Bretton Woods? Like, didn't we ask for this? So that's a little bit of the disconnect for me. Is it's kind of like, okay, the goal that the rhetoric is trying to drive is the same as, like, kind of undoing Bretton Woods, which is, hey, we want to bring those manufacturing jobs back. We don't want to be reliant on other countries. For example, during the pandemic, when we needed emergency supplies, we had to rely on China to get those, and China was saying, well, no, we got to take care of our own first. Sorry. And so then we were out. We didn't have any. We had to ration it. It was kind of a nightmare. I'm hearing the same thing from a military perspective, that there's defense manufacturing that's been moved offshore. And so when we want to go fight a war, it's like, oh, well, we need to go to China or elsewhere to get these bullets and to get these shells. And like, what? Like, I think the administration is saying, like, wait a minute, we can't even defend ourselves. We can't make medical equipment. If we need pharmaceuticals, we can't. It's all made somewhere else. Like, we have to go negotiate. Like, so if we go to war with any of these countries or have a conflict with these countries, they could bring us to our knees. Like, that's not a position we want to be in. So that makes sense. And so they're saying, okay, we're going to use these tariffs because we're being ripped off. That's where I think there's a disconnect, because it's like, no, the purpose of a system is what it does. And so the system we're in, this monetary system we're in, kind of post Bretton Woods, post Nixon shock in 1971, when Nixon fully took us off of the gold standard, the euro dollar system, like all of those pieces, they're doing what they're designed to do, which is to promote dollar hegemony, US hegemony around the world, and to make sure that our dollars are in demand everywhere. That's why you're seeing a lot of demand for stable coins, for example, with this pro Bitcoin, pro crypto administration coming in the U.S. Yeah, Bitcoin strategic reserve is out there as a topic, but it's stablecoin legislation that they're really driving with. Why? Because they look at entities like Tether that are some of the largest buyers of U.S. Treasury. So that's like the purpose of the system is what it does, as I said. And so it's curious to say, okay, well, how does that connect? It's a little bit of a disconnect. It's one way to go after it, but it seems like what happens if you put these tariffs in place, you renegotiate all the trade agreements, but you haven't shored up the dollar piece, like having the dollar as the world reserve currency. Are you really going to get there? Are you going to be able to restore those jobs? I don't know that they get the outcome that they're after. I'm on the fence. I mean, this isn't, I don't know if this is going to happen anytime soon, but it seems to me you need a neutral reserve currency and just kind of admit like, hey, we actually, with $36 trillion of debt and multi-trillion dollar deficits, I love the work that Doge is doing, but I don't think they're going to erase $2 trillion when the vast majority of the federal budget is now entitlements and required, spending. I don't know that you're going to be able to keep sustaining that, right? So maybe it's time for the world to start adopting a neutral currency instead, and slowly start to transition to that rather than a sudden, Weimar Germany style, hyperinflation transition to that. That would not be good for anybody.
I really like the way you explained that. And I think there are some big questions with whether this will work or not. But I love that you brought it back to Bitcoin. Going onto a Bitcoin standard is a whole nother level, though. And it's not something that governments want because people at this top, at the end of the day, still benefit from the fiat system. And do you believe they're still going to have to print money?
No question. I mean, they're going to have to, right? I mean, I think there's some really good folks to listen to from a macro perspective, like Luke Groman or Preston Pish, James Lavish, that do a really nice job. I think kind of laying it out. But at the end of the day, actually, another book that I need to read is The Big Print from Larry Lepard that just came out and really kind of explains this, I'm sure. But at the end of the day, there's no choice. Like nothing stops this train, as Lynn Alden says, because if you think about it, we have, I don't have the numbers off the top of my head, but you have maybe $4 or $5 trillion in the U.S. Budget. That's like Medicare, Medicaid, Social Security. You've got a little under $1 trillion in defense spending. You've got over $1 trillion in interest expense, and then you get to the discretionary stuff that Doge is trying to get after. And the receipts, I mean, we've already gone past the tax receipts we're bringing in. So, I mean, we have structural deficits in this country that are going to be very difficult to unwind. And even if we bring in, 3, 4, 500, $600 billion as is hoped in tariff income, like that's great. And I presume that goes into the sovereign wealth fund, doesn't even pay off our debt is what my guess would be. Then you've got to print. Like what else are you going to do? Now, a couple of things that could get us out of that potentially. One, a productivity miracle, right? So if AI really does become a huge productivity boost and starts to really kick up the GDP that we can produce without adding, millions more people into the country, that each American worker could be more productive, then that could help to, reduce some of that debt to GDP load that we're seeing today and maybe take off a little bit of that pressure. So that's certainly, the other, of course, they're trying to balance the budget, right? Again, I'm dubious that they'll have great success. I have seen Doge have some success. I think they're uncovering a lot of waste, fraud, and abuse, which is good. Government should be a little bit more efficient. That's great. Will they cut a few $100 billion? Yeah. Will they get to $1 trillion? I think that's not quite as likely. So yeah, I don't see a scenario where the government doesn't have to keep printing, at least for the foreseeable future. The other aspect I think is that I'd like to maybe pivot to a little bit is a couple of different viewpoints I think that Bitcoiners have of like, well, what does the future hold? Like now we have this pro Bitcoin, pro digital asset, which I know that makes people really kind of makes their skin crawl, but get used to hearing it. You're going to hear it more in DC. Is what does the future hold? So is the future like, yep, we're going to let's recognize that Bitcoin is a better store of value. It's a better medium of exchange. It's a fairer asset. So let's move to that being a neutral reserve currency that we can start to trade with our partners around the world. Let's make a slow transition towards that. Let's start to build up that Bitcoin strategic reserve so that we can kind of build up our balance sheet, do it first, right? Before some of our other partners do, and then have that slow transition. Like that's one, a possible future. That would be, I think, like that Bitcoin standard future that say safe Amos would suggest is coming. The other one I'm hearing, though, more so from those in power and closer to the president's ear, is maintaining dollar hegemony, which is really interesting. So keep the dollar, the world reserve currency, still have this Bitcoin strategic reserve and the level playing field for other digital assets. But the priority is still that the dollar is the world reserve currency and that everybody uses it, et cetera. You still have central banks and all of that. And the first model, you don't really need central banks anymore because now you've got this, neutral asset that everybody can with an honest ledger. So which one wins? Right now I feel like we're kind of gravitating towards the latter. So we're gravitating more towards this. Yeah, let's bolt on Bitcoin as store of value, but dollar is just, let's keep the dollar as medium of exchange. And to be honest, that has been my mindset, but it's my personal view is starting to kind of evolve. I'm starting to realize, like I had at the last Bitcoin conference in Nashville, I'd made a purchase from a vendor there in I won't say who, but and I used dollars to buy the product, and they were really disappointed. Maybe I mentioned this in our last interview, and so since then I've reflected, like, I should have paid in Bitcoin. Why not? Why not transact in this asset? And I'm telling the person that I'm transacting with that I value you so much that I'm going to part with this finite asset, but then I hope to also get paid in that same finite asset, et cetera, et cetera. So I think that the former view, the Bitcoin standard view, where you don't need central banks anymore. We have an honest ledger. We have all countries transacting in Bitcoin to exchange trade. That's what I'd like to see happen. And I think that was the more idealistic view of Bitcoin. But it feels to me like what we're trying to do is the other. We're trying to do it where we're trying to have our cake and eat it too. Let's buy Bitcoin, put it on the government's books to quote, pay off the debt, but still keep the dollar and still keep central banks and still keep all of that system. And so I don't know how that works. I don't know how that's going to resolve itself. I feel like in post World War I Germany, it resolved itself through hyperinflation. It resolved itself from after World War II of Britain losing its world reserve currency status and ceding that to the US dollar. So what's that mean for us? Do we kind of trying to cling to it, or is it going to is time going to take its toll and eventually we'll transition to Bitcoin whether we like it or not? I would say we should try to do it in a more orderly way, but we'll see.
Yeah. Again, I thought you put that really well. You prepared me for my James Lavish interview in a couple of
Yeah.
weeks. And I'm speaking to Jeff Booth too. And both of your explanations made me think of both
Mhm.
of them. Because Jeff Booth says we are going to go eventually to the Bitcoin standard, but he says it's going to be a long, slow, messy journey. So I think your explanation of the dollar hegemony will be the first option because that's what we're comfortable with. But maybe
Mhm.
one day we will transition. And in the meantime, the good thing is most of us can stack sats. And you mentioned like some of the companies that are starting to now follow strategies playbook and put Bitcoin on the balance sheet. Tell us a little bit about this and also about strategy because you are an investor and stay up to date on all of what goes on with strategy.
Yeah, so when we think about the era of corporate adoption, which I would say started in 2020, I think it started in August of 2020 when Michael Saylor, came out and said, I've got a zombie company, right? I've got this company that's been around since the dot-com era. It's not growing. It's got steady cash flow. It's a cash cow, et cetera, but it's not growing. And it's like there's a fast death or a slow death, as he likes to say, right? And instead, they found Bitcoin as their alternative and said, wait, if we put this really pristine asset on our books, the value of our company, our balance sheet is going to grow. And so this is the short story of, yeah, he started doing that with spare cash that they had, and then they started issuing stock, which usually is a very dilutive activity. Most investors don't like that. But in his case, it's accretive because he's printing stock, basically printing money to buy the hardest asset that humanity has ever known. They started issuing bonds and convertible bonds and so on and so forth. And so, long story short, he's grown from the company formerly MicroStrategy, now Strategy. He's grown it from a roughly $1 billion company to they're like an 85 or some odd $1 billion company today. They've been as high as 100 billion. In fact, in this bull run. And so clearly other companies have got to be taking notice. Other CFOs have got to be taking notice. Other founder-led companies, which I think is principally who's going to look at this generally, is going to look at this and say, wait a minute, we need to take a look. And so, of course, Tesla started buying, Bitcoin. Their thought was that they're going to transact in Bitcoin during the last bull run. Of course, long story short, Musk kind of backed off of that. But even though he backed off of Bitcoin and said, oh, it uses too much energy and all this and that, and kind of stopped talking about it and started pumping Dogecoin for some inexplicable reason, they still hold a lot of Bitcoin on the Tesla balance sheet. And I forget the exact number in the last Tesla earnings, but now that they've accepted the new accounting treatment for digital assets, the FASB fair value accounting standard, they recognize hundreds of millions of dollars in net income from their Bitcoin assets. So again, companies have been observing this, and so more and more companies are taking this on. Bitcoin mining companies have been starting to get into this. So companies like what was Marathon Digital, now Mara, they've become the largest hodler, if you will, of Bitcoin. I think they have something like 40-some thousand Bitcoin, on their balance sheet. Riot started getting into the game. They started issuing bonds as well to buy Bitcoin. So clearly it's been catching on. And I think the most interesting play lately has been a GameStop, which was another zombie company, meme stock, kind of caught up in the COVID era craze where people are sitting at home with stimmy checks and not sure what to do with them. And they start, buying stocks and options, and the GameStop kind of blew up. But now it's like, okay, what's GameStop's next play, right? And I've long known that they have no play. Like it's a retail store environment. They're not going to go anywhere. Games are moving online, and so they were a prime candidate for that zombie company type setup that needs something to really save the company. And so when Ryan Cohen had that picture with Michael Saylor in February that was posted on X, I knew, aha. This is GameStop's tip of the hat to say, I think we're going to get into the Bitcoin treasury business as well. And sure enough, they announced that at their last earnings, they issued a $1.3 billion convertible bond with a $200 or $300 million option. That option was exercised, so they've upsized it to about $1.5 billion. Now we're all just waiting for them to announce when they've bought Bitcoin. And sure enough, in a sea of red in the markets, GME is trading at 11.9% up on the day. So clearly that's resonating with folks. What'll be interesting to see now is if companies follow other aspects of the strategy, if you will. So not only has Michael Saylor done things like at the market offerings of stock to buy Bitcoin, convertible bonds, as I've said before, but now he's launched a couple of additional products that are very interesting. One is called Strike, which is this perpetual preferred option, which basically has kind of an embedded call option in it as well. So think about it almost like a convertible bond that's trading with a sticker STRK. That you could eventually convert into MSTR shares at given certain rules are met. Trades very differently than Strategy rather. Doesn't, they've even got a nice portal, strategy.com, that you can kind of track some of these metrics, and you can see there's very little correlation between Strike and MSTR, which is very interesting. And then they launched another product, which I'm still trying to get my arms around and learning from folks in the MSTR True North community that have really been kind of putting out a lot of good content. So I'd probably send your listeners there to MSTR True North on X or on YouTube. But they were putting out good content on this next product, which is Strife, which is another fixed income type product. So Saylor was recently at an interview where he was asked kind of the end game around these two products, Strike and Strife, and what's he trying to do with fixed income. And he said that there's about $300 trillion of fixed income in the world, and I want 1% of it. So that gives you an idea of how much Bitcoin strategy is going to try to acquire in the coming years. So it's a very exciting time for Bitcoin treasury companies in general. And I think it's a space that I think investors will need to really watch very closely.
And Michael Saylor says he's never selling his Bitcoin, so that's less for us.
That's right. Yeah, I believe actually, I forget which, it might have been Simon Yurtsevich from Metaplanet. I think he posted about buying more Bitcoin, and Saylor replied, save some for us.
That's funny.
Yeah. Yeah.
Yeah,
So
I would love to ask you a lot more on that, but we're coming up to the end of our time. And I would like to ask you, because I ask you so many intellectual questions, do you find there's a spiritual side to Bitcoin?
The aspect that I find that's spiritual to Bitcoin, again, it comes back. So again, as a Christian, and I did some study kind of through the Bible about, what is money and how does God kind of view money and what's humanity's relationship, to money, how greed can overtake our hearts. The Bible talks about the love of money being not money itself, but the love of money being the root of all evil. You cannot love God and money. So there's all of these cautions around it. But one of the other aspects that you see throughout the Bible is this, especially in the Old Testament, is a theme of justice and righteousness. So righteousness is Bible words, right? But justice really just meaning that that people are getting what they deserve. That they're hopefully doing the right thing, and then the world kind of blesses them through that. And when they do evil and wickedness, they should be punished. And righteousness is right relationship with God, right relationship with human beings around you. And so I feel like when you have a money that's really fundamentally broken, like again, the purpose of a system is what it does. So if you have this money that's meant, designed, built, and actually does debase 2% or more, per year, that's just not a good money that we should be using. And so when I think about something like Bitcoin, it's about truth. It's something that you can actually believe in and you can trust. You can study. You can look at the code. You can see exactly what it is. You don't have to be surprised by it. You can kind of trust in the code versus trusting in humanity, because the Bible's full of stories of people not being trustworthy, greed kind of gripping them and saying, okay, hey, I can take advantage. Like the oldest, versions of money printing, right? Of coin clipping. Like, let's take your silver coins and let's melt them down. Let's add some dross and some other materials, and then we've got twice as many coins now, and we can put those into the economy. And then people start seeing that, and they go, oh, so I'm going to hoard the good stuff, the old ones, and then I'll just spend the fiat, the bad money, and that's not a good thing to do. That's not justice. That's not justice against for one's people. That's definitely not righteousness, practicing righteousness with other people. And so Bitcoin forces that, I think, in a lot of ways. And people want to get better when they get into Bitcoin, right? I think we talked about this last time, that they find a better diet, they start exercising, they're taking care of themselves because they have this longer view, and they also are very good to each other. Like I was thinking about that vendor that I was buying her products, and I was kind of like, I should have paid in Bitcoin. That would have been the right thing to do. That would have really honored that person. And I can easily replace the Bitcoin, right? So yeah, I think there's definitely a spiritual aspect, not ingrained in terms of in the code or anything like that. Nor would I think about this more. Nor would I say like it's necessarily like this came from heaven, type of a. I think Saylor has a God's bank metaphor. I'm not going to quite go that far, but I am going to say like, hey, this thing that we've discovered or this thing that we've built really kind of honors, I think, God's values that He puts in the scriptures. And again, justice and righteousness; those are things that anybody, I think, any faith would want to see in the world.
Yeah, those are really good points. I do think it makes us better people because the more I speak to Bitcoiners and read Seb Bunny's book, everything is downstream of money.
Mhm.
And that book is really amazing in explaining how it affects so many parts of our lives. And you pointed out many of those there. So thank you.
That's why the Bible is so funny. I don't have the number offhand. I did some study on this a while back, but the phrase money, or the concept of money, comes up in the Bible like hundreds and hundreds and hundreds of times. There's got to be a reason for that.
Yeah. And it's about finding that balance, right? Because you mentioned, yeah, the love of money is not an admirable quality. However, we need enough money to live a good life. So it's
Hmm.
just finding the balance.
And we need a good money that allows us to transact fairly and to store the fruits of our labor and our energy. And
Right.
if we store that in a leaky bucket, and then we get back to the bucket and all the water's gone, it's like, oh, now I got to go work again, like twice as hard to go fill up this leaky bucket and bring it back home. So that's not right.
That's a great analogy. Leaky bucket, fiat system, Bitcoin solid bucket.
That's right.
Well, thank you so much for joining me today, Lee. I will put links to your X below, and I really enjoyed chatting with you.
Always good to catch up, Paula. Thank you.